The local market finished the day back at square one after losing early gains. I spoke to Ken Howard from RBS Morgans after market close.
Well, Ken Howard, a lacklustre session in terms of overall market movements. What were the competing forces at work there?
Look, we had the Commonwealth Bank and Telstra go ex-dividend today, so the combined impact of those companies declaring their dividends saw the best part of 20 points come off the market. So a bit of lifting had to be done by the other three big banks and some of the other defensive stocks like Woolworths trying to deliver a positive return for the market, but it wasn't to be. We saw Rio and Fortescue and some of the commodity stocks delivering negative results today, and I guess that's on the back of some fairly weak commodity markets globally.
Right, well, to some profit numbers now, and it was a record result for engineering firm McMahon.
Yeah, look, McMahon had a really bad year the year before, and this year they seem to have made good by producing some very good numbers. So the company had been trading at quite a steep discount, I guess a bit like Downer. So a bit of a relief rally there for McMahon and their share price. It was up 6-7% during the day, and they gave a bit of guidance for the 2013 year of 20% profit growth. So if that can be delivered, I think that'll see more shareholders come back towards McMahon. But the real question is, can they fill up their order book for 2014 and 15? And I guess that's what the next 12 months will tell the story for McMahon. Is it going to come from government spending, which is no doubt on hold in places like Queensland, or are we going to see people like BHP actually give the green light for some of their projects that are currently on hold?
Good to get some guidance. Anyway, by contrast, a caravan and demountable homes company Fleetwood has disappointed the market.
Yeah, look, Fleetwood, unlike McMahon, has been a company that the market has held in pretty high regard, and it was trading a bit of a premium multiple there. There's going to be a bit of softness as far as Fleetwood's earnings are concerned for the next 6 months or so. They have quite a large number of homes up at Karratha and up there in the Port Hedland, Northwest Shelf, Pilbara region. There's a bit of a gap in terms of new projects starting. So there'll be a bit of softness there in their accommodation numbers, but certainly there'll be ongoing strong demand as far as their demountable homes are concerned, which is another part of their business. And the caravan part of their business is likely to remain soft for the next 12 months or so because consumers, I guess, are pulling back in a lot of areas, not just caravans, but it's pretty soft out there for retail in general. So a solid result, but not a lot of upside in the short term.
Finally, I see that Sydney Airport has revealed that July was its busiest month on record. How has that been reflected in the share price?
Look, we saw a bit of strength there in the Sydney Airport's share price. It's actually getting pretty close to all-time highs. Certainly, it's well up from the highs as far as the post-GFC eras. So Sydney Airport's a very defensive piece of infrastructure with a reliable income stream that investors are currently looking for. And when we look at some of the weakness in the retail sales data here in Australia, I think part of the reasons is so many people heading overseas. So we saw a 5 or 6% lift year on year as far as outbound travel through Sydney Airport. So plenty of demand for people to go overseas and take those trips, but not so much demand for local consumption.
Ken Howard, thank you very much for joining us.
Thank you, Dickie.